And we are live. Good morning on your TVs in Texas and Louisiana. You're joining on the Smart Money Culture TV network, as well as joining around the world on X, LinkedIn, YouTube, Instagram, and the rest. Very nice to see everybody. It's always a pleasure to see you here every morning on the Impact Culture TV network. We have a great show lined up today. There's a lot going on. We have, of course, we have the FOMC. We have the CPI data coming out, which is the core inflation data, which is kind of like they really like to use this number, but it's kind of one of those things. Like it's totally fluffed up number, completely baked in number. They keep out energy and I think food out of that number, but anyway, that will be interesting. As you can see in the markets, if you've looked, and we'll go through that in a little bit, the markets are betting that inflation, core inflation, is still going to be high, and they're not going to be able to lower interest rates. Now, remember, they promised interest rate cuts 5 times this year. I ended up at a central bankers luncheon, and they brought it down to 2 times. We'll see really what happens. I think that inflation is obviously going through the roof as well. What that's doing, what we're doing by sending money everywhere is only making it worse, right? The central bank prints up the money and we send it off, and then that dilutes your holdings and it causes more inflation. So people, I think, are starting to realize how that all works. But it's a hard thing to get your head around to really understand that this is really as bad as it is, and it's true. So pretty rough. How that'll come out, and then of course there's the FOMC meeting, and the tone that they take on this FOMC meeting is going to be important, because if they're saying that the things are going to be okay and they're not going to have to do much more, and things are brighter, then that's going to have an effect on the market. And that's the FOMC, is the Federal Open Market Committee, and that's the meeting today. So a lot will depend on the tone that they take, and if not, then we could see the markets go down more. Now, normally in this type of situation, the markets, there's certain people that know what's going on, and then there's a lot of people that are speculating what's going on. But the people that know, obviously, are going to crash the market. So usually ahead of these meetings, if it goes one way or the other, that's the insiders that know what's going on, setting up the market for the expected outcome. So one would expect that inflation is going to be sticky, which we all know to be true, and then as well that the FOMC meeting is not going to be very good. So will the market slide more after that? We'll see. A lot of times, like I said, it moves beforehand so that things can happen after that. So all eyes really on those two things, the CPI data and the FOMC meeting. It is an interesting take. And Matt's going to talk about it a little bit here, but our financial market is designed to take wealth away from the masses, and it's an interesting thought, interesting proposition. Like, our financial market is designed just to take money from the masses, and that's interesting. Very few people win in the market. There's one thing, we always say, guys, if you want to trade, or you trade with us, or you follow our signals, and it's not financial advice and all that stuff, but you can do really well. It can be very rewarding, but it can also just take everything. You can lose it all, and so it's tricky. Most people lose it all. Most people lose it. 95% of traders lose. So 5% of traders win, and the other 95% lose. So that's not good numbers. So you want to be paying attention. Bitcoin's down about 3% today. already. Gold is down. Not a lot, though. Gold is down. Let me see here. Gold is down like 0.2%. Silver was down a little bit more, although silver had a pretty good day yesterday. Silver is down 2%. It was up 2% yesterday. So just kind of a ping pong there. Of course, the mighty Bitcoin, and we're going to chart this stuff in a bit, but just to give you a little bit of an overview, Bitcoin's down over 3%. Ethereum, same. BNB, nearly 5%. Solana, 3%. Toncoin, 3%. So these things are getting priced in, like I said, to the market. We have the Dow futures down about 136 points. It was down as well yesterday. The Asian markets, we have the Hong Kong Stock Exchange down about 1 percentage point. Bit of a mixed bag, but pretty much down overall for the markets. Oil is slowly edging up. It's a little bit down right now, about 0.25%, but 77.54. So that is one to watch for sure. We always keep our eye on that, as it's such an important indicator as to what is going to go on, or how the economy is. If the economy is doing well, then of course people are using oil. They're traveling more. If the economy is not doing as well, people are not flying as much. They're not traveling as much. Goods are not shipping as much. So oil is always a very good indicator. In Detroit this week, we have the People's Convention. I'll share my screen on this here. Remember, on this People's Conventions, Trump will be at this event. The Donald Trump will be there. So I'm calling a Trump rally. You can see in my post, Trump rally. Let's see here. Trump in Detroit. Let me put that down here. You can get 25% discount on the tickets. 25% discount. Use Impact Money. That's the People's Convention Turning Point. The People's Convention. Okay. And let me just make a note of 7. The People's Convention. And we've been talking about this one quite a bit. We are planning to be at this conference. There's a lot of important people that are going to be here. And it's a very important moment in time. You know, I just saw a clip, maybe I'll pull it up, of Rudy Giuliani. And they asked him, they said, are you, after he got his mugshot, I guess, and everything, are you upset? I'll pull this down for 1 second. Do you regret, trying to fix the election or whatever they said? And he said, no, of course not. I'm very proud of it. But yeah, that's it's a crazy point. And I don't know if Rudy's going to be there or not. He's not speaking, but we need to get together and we need to talk. We need to talk to each other. And it's events like this, events like Turning Point and their events that make those things possible. I'll just put this in the background while I'm talking about it. Turning Point. So Turning Point is Charlie Kirk is behind that. Of course, he's speaking. We have the great Donald Trump. Donald Trump is speaking. Vivek Ramaswamy. We have Ben Carson. Ben Carson is definitely on the short list for VP. Steve Bannon, Don Jr., Tulsi Gabbard, Kristi Noem, Candace Owens, Laura Trump, Governor Rick Scott. You have Jack Posobiec, Roger Stone, Benny Johnson, Bishop Aubrey Shines, Kim Garfoyle, Congressman Lee Zeldin. You got Matt Gaetz. We have Brandon Tatum, Eli Crane, Eric Burleson. A lot of the people here. We have Carrie Lake, Tom Klingenstein. We have Scott Presler. Scott's doing amazing work. He's probably Scott Presler has probably registered more people to vote than any other human that you know. Personally, obviously Trump's probably got a lot of people to register, obviously, but Scott Presler personally knocking on doors and everything. The guy is an absolute legend. He's an absolute legend. We have Nigel Farage, who I believe is also running for office again. Of course, we just had some elections in France, and they're happening across Europe. It's election season coming up here, and we're starting it here really right now. Mike Lindell, James Lindsay, of course, Congressman Byron Donalds, who is also on the short list for VP, Michael Cloud, Warren Davidson, and Rebecca Weber, and there's more. So this event's going to be really, a lot of fun, I think, as well. There's going to be people there, and we need to talk to each other. We have to talk to each other. I talk about it all the time. We have to talk to each other, and we have to figure out what's going on, because it's not going the way that people want it to go, right? And if it's not going the way you want it to go, why is it not going the way you want it to go? And we need to talk to each other. We need to figure out a way forward, because if we keep doing the same thing over and over and over again, of course, and expecting a different result, then that is the definition of insanity, right? So we also have a lot going on as well. You know, our Smart Money Culture TV network is really taking off. A lot of people, if you haven't heard from me yet, you'll hear from me. We're growing a lot. As well, we're collaborating on putting together the UN Blockchain Week in September. Really excited about that. We'll have our gala there as well up in New York this September. It will probably be one of the best ones yet. It'll rival some of the events that we've done over in Europe, and maybe not Versace. We'll see. Versace Mansion is one of my favorites, always. So yeah, I'm really excited about that. I think that as the markets go at this moment, when you're looking at these markets and you're thinking about having an entry or what to do, maybe you're still in or whatnot, wondering what's going to happen. It's important to know what's going on, because if you just looked at the markets, what's happening over the last couple of weeks, or a few days rather, you would think, oh my gosh, everything is crashing and this is all over. But if you have the intelligence, if you understand that there's core data that's about to come out, inflation data, and that there's the FOMC meeting, and the markets are usually the other part of the reason why the markets crash is guys like myself will like to pull their money out of the markets ahead of these meetings, because sometimes I just don't want to risk it. Now, other times I'll leave certain assets in there, but a lot of times professional traders, institutions, they just want to take their liquidity out of the market for the time being, and then see what's going to happen with these meetings, because a lot of times you get big spikes up and down. I'm sure lots of liquidations overnight. You never really want to be one of those liquidations. You always want to protect your capital. You protect your capital, and you always want to make good trades. And that's something that is it's learned. You have to work hard at it. You have to not be emotional. Sometimes you take a loss, and you just want to win more than you lose, and that's the way it works. I mean, batters, a baseball batter is a great baseball batter if he has like a 350, right? And it's a really good one. Or 400 is really great batting average. 250 still doable. No one bats 1,000, as my dad always used to say, and I've said a number of times. And so that's really how you have to look at the markets. Now, we have a lot of these small caps that we talk about from time to time. One of them is, of course, this insect coin that I've talked about a number of times. Insect is on TON. TON is really doing a lot of great things in the ecosystem. And when you take a token like Insect, who is building a launch pad in order to launch other projects that are EVM compatible, that are on different networks, that are non-EVM compatible, then you look at the market cap, and that is one that we have had our eye on quite a bit, and I've talked about it a number of times. Let's see here. They've built the INS TON. I remember they're on the TON trending bot. They have a play to earn game, which is really cool, because it helps a lot to build the ecosystem. So as you're building the ecosystem, you're bringing in more people, and then as well, people are able to earn tokens by doing different things in the ecosystem, right? So that's all really cool. Okay. They have the also mini games that are live on Telegrams. They are established as far as they have their coin gecko and their coin market cap. They're sitting at about 1 million market cap, and that is with this big pullback over the last bit. They're flirting in between 1 million and 1.5 million. And then another interesting part about the insect, and it's INS is what they trade as. There's a couple of INSs though, so be careful, but it's insect, and it's on the TON network. But another interesting part about it is they have an NFT, and the NFT is already being sold. And as an NFT holder, that entitles you to part of the profit from their launchpad. And the launchpad will be launched, is planning to be launched in over the next little bit. So that's not something that is going to take forever to make. It's basically done. And it'll be 75% cheaper than Pink Sale, which is another launchpad that everybody uses. Then they're going to use TON, Sol, BNB, ETH, and Base all on one platform to make the projects liquid, create the tokens, launch the sale, lock liquidity, do the airdrops, and the multi-cent. So there you go. Insect. I am liking the insect. Okay, let's bring on the great Matt Dixon. The great Matt Dixon. Matt has recorded a show for us again today. They are going into their launch, and so they're busier than a one-armed coat hanger, as they say. Let me pop this right over here. Okay. And I'll share my screen. Great report. I got to watch some of it before I started the show here. Okay. Share screen. Let's look at what the markets have to say. Look at what Matt has to say with the markets. Boom, boom. Here we go.
Hi, good morning, Bruce. So today we've got, well, it's a big day ahead of CPI news tomorrow and the interest rate setting meeting tomorrow, the Fed FOMC interest rate setting meeting. It's going to be absolutely pivotal. So there's real palpable fear in the markets at the moment, and we'll see that when we go to the charts in a few minutes. I'm just going to flip through a few of my recent tweets, which I think are interesting and tells part of the story, but we'll go into detail on the charts in a minute. So just very briefly, I'll click into a few of these just to show you. So for example, actually I have to click into the main thing here. So this was just one of my this is actually my pinned tweet, and it's talking about, do we really want institutional adoption of crypto? The reason I say this is, obviously crypto came into existence at the peak of the financial crisis back in 2008. And the Genesis block of Bitcoin actually had a message in it referring to the banking crisis and the bailout of the banks. And remember, we saw all the bankers being bailed out, and it's actually the general public who paid for it. That was the same across the world. So this quote I thought was quite interesting, where it says, the financial system is very often a wealth extraction mechanism. It is not a wealth creation system for the many, but a wealth extraction mechanism for the few from the many. So what we see here is that the few, the wealthy few at the top, always benefit at the expense of the many. And I just thought that's quite an interesting quote to put up there. I just think it's so true. We see that so much as we look through finance. So I'll just click through a few of the, as I say, a few of the what I think are interesting tweets. We'll look at this in more detail. In fact, we'll leave that one for now because that's a recent one of Solana. I'd like to look at that in more detail. Here we had dollar index. Again, we can look at that in more detail. So in fact, what we will do, we will look at these in more detail, I think, jumping straight into the charts. So the one interesting thing I would just look at before I do is we've got the interest rate setting meeting here, June 11th, 12th. So that's the 12th. If I click into it, we can see the next meeting is July 30th, 31st. Then we've got September, November, and December. Now, originally at the beginning of the year, the Fed were talking about 5 interest rate cuts during the year. So right now we have 1, 2, 3, 4, 5 meetings left for this year. So in other words, the Fed will need to cut at every single meeting, including the meeting tomorrow, to meet that expectation of what they said. Remember, the Fed are supposed to know everything. The FOMC knows everything that's going on in the economy. They're the people we rely on to manage the economy. They said there's going to be 5 interest rate cuts. So if they are true to their word, every meeting this year, we expect an interest rate cut. That now looks an absolute impossibility. And in fact, the odds are that we're not going to get a rate cut tomorrow. And Fed have turned back or basically scrolled back their expectations from 5, then to 4, then to 3, now to 2. So they're now saying they're expecting 2 rate cuts before the end of the year. We'll see if that actually happens. So tomorrow, the odds are the markets are actually pricing in more than 90% chance that rates will remain on hold. So we'll then only be left with 4 meetings for the rest of the year. And obviously election coming up as well later in the year. But we've got mixed signals in the economy. It's going to be difficult for the Fed. They are walking a tightrope, as I said. And so let's see what's said tomorrow. We'll see what the CPI numbers are, first of all. And then we'll see what the Fed has to say. No doubt they will keep rates on hold, but that's not the whole picture. It will depend on what they say and the questions that are asked during the press meeting after the Q&A session. Sadly, a lot of these Q&As or questions are not particularly probing. I wish I was there. I'd like to ask some more probing questions, but we'll see. Hopefully there'll be some interesting questions that hopefully elicit some informative answers that can tell us what the Fed's thoughts are, what they're thinking about the economy, and what the expected path is moving forward. So I won't labor on that. I think probably we are best just to jump straight into the actual charts, because the ones I was going to show you, it's best to look at the actual up-to-date one. So I'm starting with Solana because I mentioned yesterday, and not just Solana, I mentioned across the board, that I expected a pullback in the market. The reason we expect a pullback is I'm concerned that inflation is still a problem. In fact, CPI is still more than 50% above the target rate. And so that is a concern. The Fed will not be able to lower rates while inflation is so high. The Fed's primary objective historically has always been tackle inflation first and then tackle growth. There's supposed to be, various aspects to the mandate, the Fed mandate, and they're supposed to manage all of those things. But the first thing they do manage, their priority, is to ensure inflation is kept under control. They cannot lower rates to stimulate the economy whilst inflation is elevated, way higher than expected. They could potentially, if CPI was coming down rapidly in the direction of the target, but it's not. Inflation, CPI, has actually fallen dramatically from the high middle of 23. It's fallen dramatically as they raised interest rates. But now CPI is stalled pretty well. It's not going anywhere. It's not really going up or down. It's going sideways. The worry is that it could be like in the 1980s, where they thought they'd tackled inflation. They took their foot off the pedal a little bit, and then inflation reared its ugly head again. And that caused, a nasty situation in the markets at the time. So let's hope that's not the case. But there is a concern that rates have fallen, inflation has fallen dramatically, but it's stalled now. So there's concern that if we see CPI ticking up again tomorrow, that is a big concern. The Fed will need to act. And you never know, if we actually see CPI beginning to rise, rather than an interest rate cut, we could actually end up with an interest rate rise at some point. That's if inflation rises. I'm not saying it will. I'm just explaining the risks that are there. And there's a genuine risk that the Fed could actually have to pivot once again back towards the upside if CPI remains elevated, or not just remains, but actually starts to pick up again. I don't think they'd have a choice. If that happened, it would be disastrous for risk assets, including Bitcoin, Ethereum, and the crypto market, and the S&P, and the Dow Jones, and all these risk assets. It would be absolutely catastrophic if they were to have to raise rates again. We've already seen the Europeans lower rates, by the way, but their inflation situation is much better than the US. They have CPI inflation at 2.4%, very, very close to target now. So they had the room to maneuver to lower rates to try to stimulate their economy. That's what's happening in large parts of the rest of the world. Europe, UK is probably going to follow suit with interest rate reduction. Interestingly, we saw the euro fall dramatically on that, but not just that. Actually, I think the fact that there's an election being called in France as well caused the euro to fall sharply. So the thing is, dollar is not isolated on its own. When we look at dollar index, like in fact, we'll come back to Sol, but I'll just jump into dollar index. So when we look at dollar index, do remember we're not just looking at the dollar. We're looking at the dollar measured against a basket of currencies, the largest of those being the euro. So if the euro weakens dramatically, then we see the dollar appreciating. So I've got this on weekly. That's way too longer term, really. Although actually I will jump back to weekly, I think, just to start with. So I do think that based on this, we've had a movement down an A wave. I think we're getting an A, B, C, B wave, probably in the form of a zigzag, which would be 535 to the upside. I don't think the upside is yet complete, and we seem to have a choppy movement to the downside, corrective movement overlapping to the downside. So I do think there's more upside to come. That upside appears to have started. So I think this correction is complete, but we'll look at that in slightly more detail. But if this is the case, then we've had the A wave down, we've got B wave up, and then after that, we then get C wave down. That is when we see a big weakening of the dollar. And that actually could be a time that we see risk assets pump once again. So I'm just saying, no certainty, but there's a risk of a dollar rise here, which may not be good for risk assets. So we may see some pressure on risk assets, but let's just hold ourselves a little bit and just wait for what CPI tells us tomorrow and what the Fed are going to tell us. Maybe there'll be some clues there that are going to inform us. But longer term, again, if I just scroll out, we can actually see we're in, well, I won't go to it all, but actually right back from 2008, this goes on back and back, right back from 2008. We're pretty much in a parallel channel. I'd expect at some point we'll test the bottom of that channel. That would actually probably correlate with a pump in risk assets like crypto and Bitcoin. So while short term, I expect some movement up, which is negative risk assets, I do then expect movement down where we see some substantial weakness in dollar. And that normally correlates with a pump in risk assets. So that's the really long-term look. That's on a weekly chart. So each of these little candles is a week in duration. And that's how we can go back literally years. We can go back all the way to 2008, and this parallel channel has been respected all the way. So we'll just go to daily here. And again, I'll just open this chart up a little bit so you can see in more detail what we're looking at. More open it up, the better. So here's that movement up that I was expecting, basically in form of some kind of A, B, C. Maybe this is a three wave. So maybe it's a flat correction. We're talking about 3 up, 3 down, and then it could be 5 up. So potentially expecting strong movement up in the dollar. So that could be for any reason. It could be that we see a pickup in CPI, or it could be geopolitical tensions. Either way, that's not particularly good for risk assets. So if we see geopolitical tensions, that's usually bad for risk assets. Normally, it would produce a spike in oil prices as we have threats to the oil supply. And, there's a number of reasons that, supply chains are interrupted, disrupted. And so because of a lack of supply, there's still demand there. So prices of things go up. It means the market's less profitable. Companies are less profitable, and there's less money available for risk assets. So that's why risk assets fall when dollar rises normally. So it looks as though we've begun that rise here, because this looks so far to be quite impulsive to the upside. But as I say, a lot hangs on the numbers tomorrow. But we have had pretty clear so ABW, X, ABY. And I think that's a pretty clear what's called a double correction to the downside. So we had 3 waves up. This is actually counted as a double 3 down. And then we would expect probably 5 waves to the upside, or it could be what's called a WXY. That'd be 3 waves to the upside. Either way, I think the likelihood is we see more upside on dollar index, on the dollar, which is potentially not good for risk assets. So that is the outlook for the dollar. And as I say, it's key. Risk assets and cryptocurrency, well, crypto in particular is not a magical asset class. It's actually maturing fast. We now have the regulated Bitcoin ETF. We've got Ethereum ETF. We're getting institutional adoption. We're even getting pension funds beginning to come in and allocate. There's institutions everywhere. We're getting massive inflows into these ETFs. So Bitcoin is becoming a more mature asset. As such, it is so much more sensitive to the economic data that's coming through. In the early days of Bitcoin, it was just purely a speculative asset. It wasn't swayed by the economic fundamentals. Now it's a mature asset. It's being very much swayed by those fundamentals. So we need to change the way we look at these risk assets, the way we trade them, the data that we use to trade them. And so, as I say, as a maturing asset, now we need to look at the economic fundamentals that actually drive these things. Every time we see a change in risk assets, in the dollar in particular, in inflation, we see it affecting the outlook for Bitcoin because it affects the amount of money available in the system to invest into Bitcoin. So that's why we look at that in particular. So let's just look at Bitcoin. So as I said, fear in the market is palpable. This was the all-time high back in March 2024. So, some months back now, we've not managed to push to new all-time high since that time. It's actually quite choppy to the sideways. And this doesn't, at the moment, look impulsive. I mean, it's feasibly possible. We haven't entered into the territory of this wave up here. So it could feasibly, theoretically, be a wave 1 up, wave 2 down, and we're still working on some kind of beginning the movement upward towards within a wave 3 potentially, but it doesn't look like it. At the moment, it looks like we've got 3 waves down, 3 waves up, and we're probably going to get 5 waves down, or 3 waves down if it's a WXY as I've got labeled here. But most likely expecting some downside. But we don't need to predict the future. All we need to do is have risk reward levels that have some validity that we can actually use to trade to the upside or downside. So potentially, as I say, if we break above this dotted line here, that's the previous all-time high, we would then expect a retest of that line, then more upside to come. So if I've got this labeled wrong, and it's a 5-wave move to the upside from here, then we don't need to, worry about it. Basically, we just wait for the market to come to us. We don't chase the market comes to us. We wait for the market to break above to new all-time high, retest the support, what was resistance now would become support if we break through it. So we retest then that support and then usually head off to the upside. So that's if it goes that way. But if we get negative CPI, when I say negative, I mean bad CPI, high inflation, and stronger dollar, that would push us further down on Bitcoin and risk assets. So we need to be data dependent, just like the Fed's always saying. We need to do the same, but we've got lines in the sand, areas of risk reward where we can take trades sensibly with close stop losses in case it goes the other way, but also potentially substantial upside. So that's what we're watching out for. We had these levels marked in advance. I did say yesterday that I'm not staying long in this market. I've closed my long positions. In fact, I closed them before yesterday. I closed them before the weekend. I closed them in before the bad news on Friday last week. So I actually took profits at exactly the right places, not because I'm smart or some amazing trader or anything of that sort. I just follow basically what the charts are saying in terms of risk reward. So there's no system that will guarantee you where the markets are going. But if you trade according to risk reward, then you're usually on the right side of the market. And if you're the wrong side, you just make a small loss. So as I say, I exited my long positions before last Friday's news. I said I wasn't particularly going to go short. I did dabble a little bit short. I'll show you that in a moment on Solana, but we've had the movement down expected. So basically, potentially from this W, we've got an A up, B down, potentially a C up to finish this X wave, and then possibly further to the downside. Or we may even have completed it somewhere around here at this peak. So it may have been A, B, C, a short C wave here, and then downside. So at the moment, for me, I think there's potential for downside. I'm not saying go short. I'm just saying protect profits if you're already sitting in profit and be cautious. So I'm going to jump from here across to Solana because I did actually go short Solana yesterday. The reason I went short, in fact, I think you probably need to look on the 4-hour chart to really see why I went short. Is it the 4-hour? Let me just see. I'll just click back onto the daily. Looking at candlesticks, could it even be a longer term chart? No, it's a longer term chart actually. I'm going right to long term here, looking at the weekly. Yeah, the reason I've done that is I wanted to look at the whole price movement on the move up from the low. It was only back in 2023, somewhere around there, that we saw this low, FTX low, I guess, around the $8 mark for Solana. And we've seen a very clear movement up to the upside. So wave 1 in blue, 2 in blue, 3 in blue. That third wave itself was made up of 1, 2, 3, 4, 5 in red. And then we got a very clear ABC down, where the C equaled the A. So it's a very, very nice correction to the downside. Oh, sorry. No. Let me open it out because I can't see it properly. It wasn't 3 waves down. Sorry. It was actually 5 waves down, as we can see here. From the top there, we've got 1, 2, 3, 4, 5. Now, what that tells me is either we've finished the upside movement and we're now moving impulsively to the downside, but I don't believe that's the case because I've got this labeled as wave 3 in blue at the top. So I'm expecting a wave 4 down and 5 to take it to new all-time highs. So that's why I'm not counting this 5-wave move as impulsive. I'm counting it as part of a larger correction. So we got 5 waves down, then we got the ABC higher in 3 waves with the C equaling the A. So again, you can measure that at your leisure. And then we're beginning to move to the downside. So I'm thinking the most likely scenario is we'll continue to the downside. So we've basically got 5, 3, 5. That's what's called a zigzag correction to the downside here to complete wave 4. And then we'd expect a push to take us above this local high of about $210, $209 on Solana. So the longer term outlook's really positive. If you're hodling long, fantastic. You may have got in really early. Don't risk losing your position. I'm not saying, I would say don't jump into new long positions at this stage. Maybe if it falls down here, look at DCAing, filling your bags if you want to enter new positions. But for now, I'm pretty neutral. Although these candlesticks told me that following the ABC down, we basically had this big movement up here. But then we got a quite negative candlestick here. This is a negative candlestick, tested much higher, ended low with this small body at the bottom. That's a very negative bearish candlestick. We got another bearish candlestick. So that's a negative hammer candlestick. We got another bearish candlestick. Then we got a doji, undecided, but actually still with a slightly red, what they call real body in the middle. And then we got further bearish movement here. So I actually went short, just dabbled, nothing big. I wasn't really looking to go short in a big way in the markets because we've got CPI news tomorrow. We've got inflation news. We've got the Fed interest rate setting meeting. Markets are nervous. So we had a bunch of negative candlesticks. We've got a nervous market. So I just dabbled with a bit of a short. Now I'm fully protected. No matter what happens, I can move my stop loss into guaranteed profit. No matter what happens, I walk away with a profit. If it goes much lower, I walk away with a much bigger profit. So overall, I'm really happy with that situation. So that's Solana. We'll jump around because I think I've spent a lot of time today. We'll jump around at a few others, but let's just have a click through here to Litecoin. Once again, we're seeing a very similar situation with a move down in Litecoin. Looks like probably 5 waves down. Then we're going to corrective move up, and then we're moving fairly impulsively to the downside again. We've already been into this stop loss zone. I actually went short here the other day. I closed my position when we get into this stop loss zone. I'm not going to enter any new positions. I'm actually waiting for the market probably to fall a bit further. And as I say, I'll look to DCA in gradually with little bits, not committing too much, but I'll look to DCA if the market goes low with this CPI news. So let's see. Again, just jumping into XRP. I think I'll probably go back to daily here because these were very long-term charts we're looking at. So we can see more clearly daily. I think we've had a W wave down, which is some kind of 3-wave move down. We've got an X wave, which is a triangle. And then the E wave within the triangle is itself a triangle. And then further movement to the downside. I expect most likely we'll continue to see further movement to complete a Y wave. At that point, I think it's going to turn bullish and we should get a really good little bull run. But for the time being, there's big risk, big concern in the market. We'll just take a little quick look at gold. Gold, once again, as I say, weeks in advance, we said we're expecting this to be a bigger correction. I said it could be complete here at A. But then as we got choppy movement up here, I said it's more likely we're going to have A, this is going to be a B and a C down to the downside. That's precisely what's happening. So it's looking right now as though we're probably going to get some more movement to the downside to take us below the end of this A wave here, just a little bit below. But then I expect more upside to come. So I think that gold is still bullish longer term. I would not dream of going short gold because we're near the bottom of this correction, I believe. So again, if I've huddled from way back, because gold has been bullish for ages, and I think it's still bullish, this is just a correction to the downside, I believe. And I'm reasonably positive because this movement down here, we can see the bottom of this movement from the O down to here is actually overlapped by this movement up here. So we can't have 1, 2, 3, 4, 5. That count is not valid because this movement up overlaps this movement down. That means it's not a 5-wave movement, it's a corrective movement. So I've labeled it as A, not as 1. So because it's corrective, it means we expect new all-time high to come. And even here, we have corrective movement so far to the downside. So I'm still expecting at some point upside movement to come, but probably following a little bit more downside before that happens. So again, Ethereum is the same story, that we seem to be correcting, and it could actually be because we've had basically a corrective move down here. This looked a bit impulsive, but it could again be an ABC to the upside. I'm still expecting, I think the whole market is going to be highly correlated, and I think we're probably going to see more downside even on Ethereum. And Ethereum has got a lot of bullishness behind it with the ETF approval recently. So at some point, I'm expecting some major bullishness. But before that happens, I think the CPI news is going to be the big driver. Oil has been a bit of a surprise of late. I'm not sure whether this is down to geopolitical issues. I think there have been some things going on. Oil and gold are normally highly correlated, but we're seeing a bit of a pickup here. And I'm quite surprised, even on the daily chart, we've actually had a close again above this support line, which once we fell below it, I actually thought we were going to retest it and head back down even lower, but it's actually broken back above and closed above. And so at the moment, oil is positive. And as I say, there are various drivers for oil, for supply and demand. And one of the big drivers, of course, more than anything, is the geopolitical situation. So if there's pressure geopolitically, whether it be Israel and the surrounding nations, whether it be Iran, Russia, sorry, not Iran, Russia, Russia, Ukraine, or even China, Taiwan, whatever it might be, this will be basically positive for oil if we see those tensions rise. We don't want to see that. We hope it doesn't happen. As Bruce always says, we hope for peace and for tranquility, but we have to be aware that unfortunately there isn't rest everywhere in the world, and that elevated tensions are seeing oil prices rise here. So we're seeing, just generally to summarize, we're seeing negativity really right across the board here. You can see all of the assets are negative. DXY, I'm sure, will go negative. This is just looking at the yesterday's figure, I think. DXY is showing positive because it's dollar index, and we're seeing, dollar pumping while the other assets are falling. So we can see across the board really all of the risk assets falling. Even the memes are falling usually as more than the others, but actually we're seeing pretty big falls across the board. Even ICP, which is one of the favorites out there, falling nearly 5% today. Bitcoin is down 2.73%, ADA down 2.27%. We're seeing just negativity across the board, and this is just very typical of the nervousness ahead of tomorrow's figures. So this nervousness will continue, I suspect, until those figures come out. And then the movement from that point onwards will depend on those figures. So tomorrow is going to be a big day. So watch out on the money tomorrow, on Impact Money tomorrow. We'll be summarizing just before those figures come out, or the day of those figures coming out. We'll be summarizing the situation in the markets, the expectation in the markets. So it's going to be a very important show tomorrow, because this will set the expectations for future movements of all those assets that we're following. whether they be the stock assets, with the S&P or the Dow, even if it's bonds, because it's going to affect bond prices. The interest rate outlook will affect bonds, whether we're looking at crypto, whether we're looking at gold, whether we're looking at oil. All these things will depend very much on news out tomorrow. So I'll finish for there today. I hope it's been interesting and useful. And as I say, tomorrow should be a really good day for us to look forward to and see where we stand. So thank you again for listening, and look forward to catching tomorrow. Thank you again.
All right. Well, there we have it. The great Matt Dixon. Matt Dixon. I'm going to pull this up in a second with another great report. The markets are, very, very tepid or scared. They're scared at the moment at what will happen, and you see a lot of that price action going in there. So be careful out there. If you're trading, you may want to pull back. It's a tricky time to go short or long. And if you do, make sure you have some stop losses in there. It can be profitable. Chop can be profitable. That is for sure. So I have an interview from Consensus pulled up here from Consensus. Change my background. There we go. This is Amy Kalnoki. She's the CEO or COO, I'm sorry, of Bitwave. Great interview that we had. Listen in here. This is from Consensus 2024 in Austin. And we are back here on the Impact Money Show, Consensus 2024. What an exciting event. I have with me here Amy Kalnoki. She's the COO of Bitwave. I think we've all kind of heard of Bitwave before. Yeah. So tell us a little bit about Bitwave and what brought you here to the Consensus conference.
So Bitwave, we started in 2018. It's been around for about 6 years now. We are the leading digital asset finance platform for bookkeeping, tax tracking, revenue recognition, anything a business needs once they start transacting in digital assets and cryptocurrencies, to keep the books and records, to do all the fun finance related, compliance related, accounting related things that they have to do once they start transacting in crypto. Because existing solutions, if you think like a QuickBooks or a NetSuite or a Workday, they can't handle cryptocurrencies natively. And so we really sit between your sources of digital asset data and whatever you're doing your fiat accounting in, to give you the tools to do that bookkeeping, accounting, tax tracking, and FP&A type work.
Well, it is really interesting, right? Because I can remember even over the years, doing different deals or sponsoring even events like Consensus or wherever, and people are like, oh, well, no, we don't accept crypto. And I'm like, well, look, you're going to either accept the crypto or I'm not going to be a sponsor.
Right.
But it's hard. It's hard for companies.
It's really hard. I mean, to do the accounting work properly, it's very complicated, because typically accounting for cryptocurrencies, you kind of treat it like an inventory item plus a Forex, because it's something you have to track lot by lot, but the price goes up and down. It can be really complex. And so that's why we really set out to build Bitwave to help address these challenges, because we felt really passionately that businesses would be transacting in cryptocurrencies. If individual retail users loved crypto and were embracing it, businesses would follow suit. But they have to keep records. Your CFO can go to jail if you're not. I mean, we know with FTX, people can go to jail if you're not keeping good financial records, and accounting policies and practices. These are really important things. And without it, a business can't really accept crypto as a form of payment, not compliantly, and track it and not do their balance sheet and reporting like that they need to do.
So let's talk a little bit about how it works. So let's just make it kind of easy for everybody. I have a lawn care business, and somebody wants to pay me in crypto. Maybe I'm normally just charging their credit card every month or something like that. What does it look like for somebody like that?
Yeah, I mean, I'm really excited about like stablecoin payments for businesses. So thinking about paying someone like a vendor, someone to mow your lawn, accept that as crypto. So you would have a wallet, and that's a revenue event. So you have this process of doing like revenue recognition. You have to match up and you have to reconcile the money that's coming into your wallet as a form of a payment. You probably issued an invoice or something like that. You have to match that, and then you have to get that back into whatever you're using to track all the revenue for your business for the year. And at the end of the year, you have to pay taxes on what you've made. And with crypto, if you've liquidated some of that, you maybe have a gain or loss that you need to be tracking.
Right.
So there's all these different pieces.
Well, yeah, it is, and it can be a gain or a loss. If you've been in crypto long enough, you definitely know that. In a bull market, it always feels like a gain, but when it's not a bull market, it always feels like a loss. So really, it's important stuff, right? And very interesting. So talk to me a little bit about, so with QuickBooks, we're all kind of familiar with that, right?
Yeah.
You just kind of, you plug it in, but a lot of it's manual, but there's a lot of it that's not manual as well. Do you guys have some of that functionality?
Right. Yeah, so we integrate with something like a QuickBooks.
Okay.
So we're going to help you bring that blockchain data and get it into QuickBooks in a way that QuickBooks will understand. So we are in the marketplace of QuickBooks and some of the other. Oh, hi there. How are you?
We're live right here
at Consensus. Always fun. So we'll integrate with something like a QuickBooks, or if you go up market, to some of the other ERPs in this space, and it's a deep two-way sync. So we're going to bring in your chart of accounts, so all your customers and the different expense categories or revenue categories, all the things you already have set up in something like a QuickBooks, bring it into Bitwave, give you the workflow to do the crypto accounting, the blockchain accounting, and then push that back into QuickBooks. So you can continue to use something like QuickBooks, NetSuite,
that you're used to.
Yeah, for your fiat accounting, but now your blockchain data will be in there as well.
Amazing. So it's a big conference here. We've all probably moved mountains and whatnot to make sure that we're here and have the right exposure and the right look and everything else. What constitutes a successful event for you guys?
For us, we work with a lot of our partners. So we partner with accounting firms. So we're the software piece. And so we partner with all these different accounting firms in the space. So it's great to catch up and spend some time with our partners. We have a bunch of customers here. And of course, you come to one of these events for networking. So looking to meet any new businesses. If you're a business and you're transacting in crypto, you need accounting. And so we want to help you out with that piece.
And so if you don't mind me putting you on the spot just a little bit, what does it look like for somebody? I mean, what's the cost of something like this?
I mean, the tickets,
sure
it
varies.
varies.
Yeah.
You buy the tickets early enough, they're not so bad.
Okay.
Some of the passes, they always have super sales. I feel like the conferences put their tickets on sale like the next day, right when it ends, like next week.
No, I mean for Bitwave.
For Bitwave.
Yeah, for your solution.
Yeah, for Bitwave solution. Oh, I'm sorry. I thought you were asking me how
I would
much
never
it costs
do
to
that.
attend the
No.
I think it's worth it.
Me too.
You buy the ticket early enough.
Yeah.
It really varies. So we're a SaaS platform. So it's a license fee for users.
Okay.
And then we scale. So the cool thing about Bitwave is we'll work with smaller companies, but where we really excel are some of the large enterprises. So we'll work with some of the biggest exchanges, marketplaces, and foundations. So if you're a token issuer, if you're launching a new L1 or something like that, L2, you're probably going to have huge transaction volume. So our platform is designed to scale. So price point can be an entry all the way up to the largest enterprises who are doing billions of blockchain transactions a month.
Well, it must be so rewarding to work with these types of people. These are successful companies that I think are transacting in these in going into crypto. What have you seen? I mean, over the last let's say 6 months or a year, have you seen an increase in these companies' revenue? I mean, without don't give us confidential information or anything, but have things improved?
We've really seen an increase in the number of enterprises embracing blockchain and digital asset, and so for me, that's the exciting part. As we start to get more regulatory clarity, hopefully, if it passes the Senate, if 121 passes the Senate, then we'll see more clarity. Because businesses, they don't really like regulatory or compliance risk.
Right.
And so the more that we have solid set of guidelines for people to operate in, the more we'll see large enterprises, financial institutions embrace crypto, and then that'll just help bring the whole industry up.
For sure. I mean, we don't have to really think more about it. We have enough. People have enough to think about, right?
They do. Yeah.
You have enough to think about. You have enough to work on. And so if accepting crypto is going to add another layer of stuff that you have to do, a lot of people just won't do it.
Right. And that's what we hope. We are here to help enable enterprises to use digital assets so that their finance team isn't throwing up the red flag and being like, no, you can't do this NFT project, or you can't build on the blockchain because I can't account for it. That's what we don't want to see happen. We want to be there like, don't worry, we've got you. You can have, still pass your audit. If you're using crypto, you just need a software solution like that.
Amazing. Well, Amy, thank you so much for coming on.
You.
How do people find you guys? What's the best way to get a hold?
.io. We're on LinkedIn, Twitter, Bitwave platform. So bitwave.io, best way to get a hold of us. Thank you so much.
Thank you.
All right. Well, there you have it. Amy and Bitwave, they're doing some great work. It really, bringing people and bringing companies into the space that can use crypto. I can tell you, like I said in the interview, you know, I can't tell you the number of times I've told people you're gonna take it, or else I'm not sponsoring the event, and they'd have to jump through loops and figure out how they were going to do it. So it's hard for people, and we need to make it easier. We need to make it easier for people to accept crypto. So great work that Bitwave is doing there. You can check them out on their platform. We've done it again, guys. Another great show. It is always a pleasure to be here with you. We're going to be back on your TV sets in about 5 hours there on the Smart Money Culture TV network. We're going to keep working it. There's a lot of stuff going on. Our eyes are on the market. Our eyes and ears are what is going on, the geopolitical instances that are happening, the markets, everything like that. I am signing off for now. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.